Welcome to Inside the Deal, Healthcare VCs to Watch. I'm Carrie Nixon, and I'm the founder and the managing partner at Nixon Law Group, where we work exclusively with healthcare innovators to build the future of care. So this series is meant to spotlight investors who are backing great health tech companies, and while they're doing it, helping founders navigate the complexities of scaling in healthcare. So on that note, I'm thrilled to be joined today by Kapil Desai of Catalyst Investors. Kapil has been investing at Catalyst for almost 11 years now, and I know that he's got some great tips and tricks to share with us. So I want to go ahead and dive in. Kapil, welcome.
Hey, Carrie, thanks for having me.
Absolutely. So tell our audience a little bit about Catalyst Investors. I understand that health tech is one vertical within the fund. Is that right?
Yeah, no, so Catalyst is a firm. We are tech generalists in healthcare, represents about a third of our investments, sometimes a bit more. In terms of a little more background, we were founded 25 years ago this year, so we're celebrating our quarter century. And the one consistent theme of it all is we focus on, next generation technologies and tech-enabled services across a whole host of sectors and markets. But healthcare has been a pretty important one for us, and it's the area I help lead here at Catalyst.
That's terrific. So are you looking for companies at a particular stage in their existence when you're looking at investments in health tech?
Yeah, absolutely. So we have a singular focus here. We think of it as, the growth stage, but really the early growth stage. And so when we're looking at companies, they are post product market fit. There's resonance in the customer base, there's repeatability of the metrics, and these are, founders and teams that are really looking to scale that out. And so we typically get involved when companies have around, 5 or 10 million of revenue on the low end, and our job is to supplement the team with the resources, know-how, and other background knowledge to help them get from that entry point to whatever that next inflection point might be, 50, 100 million in revenue, whatever marks success for them.
Okay, so not the very very early stage for sure. They've got the folks you're interested in have revenue in the door, and you see them as having the potential to really scale.
Yeah, absolutely. These aren't a couple of slides and a big dream. These are real companies with real customers, real repeatability, and really what they're looking for is it's working with this cohort of customers or this geography or this service line. How can we now expand that as we continue to earn the right to deliver to other parts of the customer base or market or otherwise?
Yeah, no, that makes sense. Well, you have led investments in sort of a host of different types of healthcare companies. As I understand it from our earlier conversation, you have worked with virtual mental health, a company, a remote neurology practice, and then practice management platforms in general. Um, do you see connections among the deals that you do? Like, are you looking for those connections, and do you find a way to facilitate those connections?
Yeah, absolutely. And so we're really focused here at Catalyst. And so within healthcare, which again is where I spend almost all my time, the general theme for what we look at are, solutions that enable the delivery of care. So what does that mean? It means anything that's often provider focused or provider adjacent that, improves clinical quality, improves operations, both saving costs or improving productivity, or ideally some combination of all of that. And so we end up looking at software, tech-enabled services, both front of house and also back of house, and everything else adjacent around that ecosystem.
Now, you mentioned that, health tech is one important vertical in your fund. Are there ever any connections with sort of the companies in your health tech vertical and the other verticals that you work within?
Absolutely. And so, I mean, when I think about it within healthcare, there's obviously a lot of different constituents and a ton of nuances, particularly if you go selling into larger health systems or inpatient settings that they themselves have a whole host of, healthcare specific nuances to them. However, in the ambulatory settings, which of course need to coexist with these other larger players and systems, there are a lot of similarities to other sort of verticals and, go to market strategies and needs that they're effectively businesses practicing healthcare, but just in a different setting altogether. And so a lot of the themes in how to win customers, how to grow them, how to be successful with them, the type of brand marketing awareness and otherwise that they really, engage with and see pull from. And honestly, running the business, big or small, there is a lot of challenges that they need to deal with. And so a lot of the themes we've learned in other industries, like restaurants, like legal, like accounting, construction, there's several of them that me and my other two partners have had exposure to, we can draw parallels while still appreciating some of the healthcare nuances that, you know, healthcare typically comes with.
I mean, that's it's really interesting to think about, those other industry lines. Like, we tend to think about healthcare as being so specialized and so niche, but we do have some perspectives in common, right? And to the extent that there can be lessons learned from other types, other industries, companies in other industries, uh, you know, that can be super useful. I have actually found that sometimes sometimes the most successful founders that come into the healthcare space are founders who have never been in healthcare before. And the best ones are sort of the ones who know what they don't know about healthcare and they know to ask it, but then they're bringing all of the lessons that they learned in their other businesses to the table, and sometimes looking at healthcare through a very different lens than those of us who've been in the industry for a while.
Yeah, no, it's something we think about a lot, right? It's I mean, healthcare has a ton of opportunity and has a lot of opportunity because there's a lot of challenges with it, but a lot of what ultimately shapes healthcare is people driven connection, experiences, and expectations. And people have expectations and experiences mostly outside of healthcare, right?
Yeah.
As individuals that have smartphones, that use the internet, that go to different services, and that level of expectation and service. I mean, even a decade ago, there was a little theme around the consumerization of healthcare and how people want to get it, engage with their provider. And yeah, the introduction and proliferation of patient portals and different texting features. And, today there's a whole slew of co-pilots of people are now armed with more questions than ever to talk to their provider. And so while healthcare itself has its own needs and challenges and processes, it's not insulated from the experiences that we as individuals have across different sectors. And so, knowing what is applicable, or at least what's on the come, because it's we're proud of investing in healthcare. We do it because we think there's a lot of opportunity. There's a lot of catch up healthcare has to do to other sorts of arenas and areas that people have come to expect, and as they should. And so having that sort of broader experience to draw parallels, know what's relevant and what's not, that's been really helpful for us as we, meet and hopefully partner with companies.
Yeah. Yeah. I mean, as I said, I've seen founders come into healthcare who have never had experience before, but there's usually a reason that they do so. And
Hmm.
it's usually an experience that they or their family members have had with the healthcare
Sure.
system. And they go, this can be done better. Like, why isn't this done better? Do you find that with a lot of the uh, founders
Oh,
that you talk with?
absolutely. In many ways, I feel like the archetype of the teams we back, it kind of breaks into two areas. You have one, it's typically the provider that, learned some process or felt the pain firsthand in his day to day and thought, one, this absolutely can be better. And two, why can't I productize this and provide it to people like me? And the example I give on this one is a company we back called Savaro in the teleneurology space, founded by a physician neurologist who learned that under the academic physician that created the telestroke protocol was helping a hospital institute, and he realized this isn't just operations, it isn't just technology, it isn't just education, but it's a combination of all of this, which me as the end ultimate user of this can create in a way that not just me as a neurologist, but other neurologists would be able to use. And so ended up productizing it. The company's been growing quite well. It resonates, and that's the firsthand experience. On the other hand, the other profiles say it's exactly what you said. It is an entrepreneur or a talented individual that has directly felt, or someone close to them has felt a challenge firsthand, and they're like, this just has to be solvable. For that, I'd point to another investment we made in a company called Tava, which is in the mental behavioral health space, effectively creating the operating system for the next generation of therapists, that are here today and that are here to come. And the CEO, Dallin, he saw the challenges that his wife would have in terms of the interactions of delivering the care, and then all the note taking, all the eligibility checks, all the compliance, and all the work where she is doing a lot more on the administrative than what she trained and what she should be doing, which is helping her clients. And so him having a background in a previous startup realized I can create the tools to build this. And that's what he did. He put the provider first. He saw the tooling that his wife and people like her could use, help them effectively abstract away all the different challenges a therapist might encounter, so that you go back to the core unit, which is delivering care to people how they want it, when they want it, in a way that they can afford it. And so having kind of those two profiles, the person delivering the care and knows it best, or on the other side, the person who feels the need for that care, they get some of the best pull out there.
Yeah. That's gotta be extremely important. You probably wanna have a portfolio that has both of those ends in them, right? So they can learn from each other and speak to each other.
Yeah, it's if you want to push something forward, in many ways, you need enough information to know what you're getting into, but it needs to stop at some point so you can have the creativity to think, why not push this further? Or why can't we do more with this? Or I've had experiences or similar examples in other areas. This can be done. There isn't this artificial roadblock. And so, you know, the experience certainly helps, but having either the open mindedness or the adjacent experiences to not know enough, that actually does make quite a difference.
Yeah. So where did your interest in healthcare generate? Like, did you get interested in healthcare when you came to Catalyst, 11 years ago, or did you sort of have a pre-existing connection to it?
Yeah, well, even before Catalyst, I come from a family of many providers. Name a specialty, and there's some physician in my family that likely does it. So it's been something in and around for quite some time. So
It's handy.
uh, yeah, it's even before ChatGPT, I had a lot of family members online that are my own personal ChatGPT for these areas. But it's something that growing up and even today have a bit of the insight and a little bit of the empathy for how the provider thinks. And one of the big themes around catalyst, everything around enabling the delivery of care, one of the truths we believe is the provider is the center of that care. Of
Mhm.
course, the patient is the one you're looking to improve the outcomes of. Of course, the payers are helping the dollars actually flow to provide the means to have the care, but the provider is the one that pulls it all together. They're the steward of care. They're the ones allocating the resource, and they're the ones ultimately ensuring the adherence happens in the way it needs to happen. And so if you put the provider at the center of what you're looking for, that's what I think can actually push things forward. And so with me, having non-providers in my family, both friends, family, and otherwise, it felt like a natural area of interest and also a bit of a personal area of interest to think, can I get closer to this? Can I make their lives easier? And if their lives are easier, then the patient's lives are better.
Yeah. Amen to that. Amen to that. Okay, so let's shift gears for a moment and talk a little bit about deals that you look at. Um, what is sort of a common misstep that you might see founders make, especially when they're first beginning to engage with a growth stage investor like
Mhm.
you?
So I think I think there is obviously a lot of opportunity in healthcare, and it is clear by the level of investment, the overall fact that it's still about 17 or 18% of GDP. So the opportunity is massive. And so a lot of the awareness of the problem, I think, is clear. And I think many startups do a great job of that. Where they start to fall short, I think, or can fall short, is they don't talk about the why are they the right ones to go after it. At the growth stage, it's a little bit different than the early stage, where
Yeah.
it is a bit about defining the problem and going after it. The growth stage is, why do you have the right to continue to solve this problem and ultimately earn the right to do that for a larger and larger portion of the population and customer base? Because it's not enough to say, you know, there is an obesity problem in this country, right? It is rather, why is this company the right one to actually improve on that issue, through what channels, and why will that continue to be the case? Because that is, when you get to the growth stage, ultimately the question, not that there is a problem, but why are you going to be the one to solve it at scale in a way that makes sense for all the different constituents? And so really defining the right to win, the right to persist, that's the number one thing we're looking for early on, because the problems, I think, are increasingly known, but the solutions and persistence of the solution, that's ultimately what we're looking to solve for.
So what's the answer to that question, right? Like, why is it like, why is it that you're the right company, right? Is it because the founders have a track record of being successful in other companies? Like, what else might it be?
Yeah, it could be a couple things. So of course, pedigree is helpful, but pedigree is a lagging indicator. And
Mhm.
so I think about it at the growth stage, there are real results. It's not perfect information, right? You can't perfectly say, if I invest in these areas, the company is going to grow this quickly. If I build this product, they're absolutely going to buy it. But there is enough data there, especially if the companies are tracking it, organizing, and telling a story in the numbers with the overlay of the narrative, that can say, look, this is working. We earn the right. I'll mention Savara, the teleneurology business again. They started in telestroke, and they cut their door to needle time faster than industry standard by insane amount. I mean, you get a vascular neurologist on video in less than 45 seconds. I think it's less than 30 seconds today. That's faster than if you're in the hospital itself. That's
Yeah.
incredible. They've earned the right in there. They then use that to get into other parts of the hospital, into more follow-up visits and inpatient rounding. Use that to get into other parts, whether it's tele-EEG reads or outpatient settings or other areas. And so there's a story of, have you earned the right to show you can be successful in a core problem, be the best at it, and then earn the right that we've done this, so we can also do this. And so it's a little bit of, it's never perfect. The information, of course, if it is, then
Right.
our jobs get infinitely easier. But can you, generate reasonable amounts of trust by showing a track record, even limited, of success, and how you plan to extrapolate that into other areas? So it's very much, again, prove it in the numbers and extrapolate that for why you've earned the right to the other areas, or even going deeper. That's okay too if the opportunity is big enough.
Yeah, that's great insight. And I'm it's something that I'm sure our listeners, especially those who are beginning to sort of be in the growth stage, are are looking to make use of for sure.
Hmm.
So sort of flipping it a little bit, how should founders of growth stage companies think about finding the right investors, right? Not just sort of a check. Like I've heard it say that, the early stages, they really need the guidance of like people who have a lot of operational experience, right? But
Hmm.
but but I think it's probably different for the growth stage. Like, how do you think about that?
Yeah, it really comes down to, what is the team looking for? And so one of the things I see happening at the growth stage is, certain companies will raise capital, but they'll raise capital to meet the requirements of the fund that's looking to invest a certain, like, I have to write a $50 million check, or I have to write $100 million check, or it needs to be this or it needs to be that. And I think that's a bit of a backwards way of looking at it. I think just blanket, just, what does this company want to be, and how do we capitalize for that? And what I mean by that is, the company, the cap table should be in service of the business purpose and the business goal. The company shouldn't be raising just because, well, it's a growth stage, they'll raise money for growth stage. I don't think companies need that dilution. And honestly, it's probably not going to be the best outcome for investors either. Instead, it's, okay, we've done X at this point, and as we look forward, we see Y opportunity. And if we are able to, succeed in this experiment here or this area here, then Z opportunity is open on top of that. And so if we want to go after that and create the right buffer, how can we construct the right round and enough buffer to be able to execute on that without taking excess capital that can start to change the trajectory of the business in a not so positive way. And so really, I think sometimes they get to throw away. People pick round numbers, or they pick whatever they think people want to hear. I think it is really important to say money is available in a lot of different forms, and growth equity is one of them. There's debt, there's other alternative sources of capital. It's really, what is the purpose of it that helps you understand what you're going to do about it. And then once you have that, then you look for, okay, well, what do I really want beyond that capital? Because I think that actually opens up a number of different areas of where to focus and how to position yourself. Some people might want customers, at which point you should look at growth equity firms with strategic LPs or introductions, or a network that brings certain types of individuals to the company, or at least open certain doors. Some want, a sounding board and a strategic partner. For example, Catalyst, we don't have the strategic LP base, and we're not gonna, promise interest we can't make, though we are quite helpful in many of those. What we will tell you is all we do is growth stage investing. There's one strategy, one approach. And so if you are an entrepreneur that's looking for help for someone, that all we've done in our 25 years is come at this one entry point and help companies get to this next one, that's what we will help bring to the table. And that's what we focus on, because, you know, there needs to be a two-way match, not just a one-way availability match. And I think that sometimes gets lost in a lot of the feedback and commentary around momentum here, urgency here. I think it does benefit both ways for people to just take a step back and really think through, what do we actually need here to achieve our goals?
Yeah, that makes a lot of sense. I mean, I think that I hear founders sometimes talk about always being in raising mode. They're always, always raising. And, based on what you've just said, it sort of occurs to me, well, if you're always in raising mode, when are you really taking a step back and looking at your company and saying, what do we really need? Right.
Hmm.
Right. Not just like, okay, it's time for our Series C.
Yeah, it's as an investor, I wish anytime I call a company, they pick up and we can talk. But look, founders, it is, you have a day to day to run as well.
Yep.
And so, of course, the easy advice is, yeah, build relationships, continue that over time. It'll pay dividends down the road. And that's probably elements of truth in that. But also, maybe you don't need that much capital in the grand scheme of things, right? Maybe you don't need the dilution. And so really pick the strategy and approach that works for the execution that you've performed, the opportunity you're going against, and let that determine the capital strategy. Because especially in the world as we look forward, as the tooling continues to improve, the input costs to get to scale continue to reduce. And I think it is a reasonable assumption to think some element of that will persist. Now, of
Yep.
course, if you can raise money and it's favorable and it makes sense for your team, primary, secondary, or whatever is necessary to organize, orient, and align the team to the next point, you do what's best for your business. But start with that last question, what's best for the business, and then we can figure out what's good for investors and everyone else along the way.
Yeah. So talking about strategy, you've been at Catalyst for nearly 11 years.
Hmm.
Healthcare technology looks a lot different now than it did 11 years ago. It's going to look a heck of a lot different 11 years ahead of now.
Yeah.
Anyway, given the time that you've been at Catalyst, how has the firm's health tech strategy evolved?
Yeah. Um, the arc has certainly moved from when I joined in 2014 to where it is today. And I hope, 10, 11 years from now, it continues to advance, because it's incumbent on us to keep, moving forward and not remaining static. And so when we started investing in healthcare, I almost think of it as healthcare light. It was software only, the cliche system of record. So this is predominantly, a practice management system or a specialty EHR. I mean, the first healthcare light deal my colleague actually did back in 2009, a business called MindBody in the yoga studio and wellness space, basically business in a box. Many people are probably users or indirectly users through ClassPass at this point, but that was, to the point about Can you bring expertise from other verticals into healthcare? Well, this sort of bridged the gap. This was the core system of record for a ancillary healthcare, a wellness, for gyms, studios, spas, salons, and it continued to advance from there. That was the first sort of deal we consider healthcare catalyst, even though it's very sort of healthcare light. But we use that to then invest in a specialty practice management EHR rev cycle for physical therapists in outpatient settings. Again, system of record, there's a box, there's a retail footprint. It's taking on more of the function. It just happens to have some nuances of billing with respect to how RCM works versus, credit card payment or other side. We then use that to then get into telehealth through a speech language teletherapy platform. Because again, it was a core function. It was selling to a specific end base. In this case, it was education that we had experience in from another area. And we understood the dynamics of the selling process. And so we sort of have evolved from software only, asset light into virtual care. The last 4 deals have been specialty virtual care in the areas you've mentioned, whether teleneurology, mental behavioral health, multi-specialty RPM at this point. And the theme here isn't, it needs to be software only. I think that was never the theme. The theme is it selling to a market in need? If you are successful in that market, is there a big enough opportunity that's worth it? And can you do it in a way that is reasonably predictive or reoccurring in the normal types of models that you're familiar with? And so whether that is software only or software and services on admin, or financial, whether it's billing services or software only, or even on the clinical software selling to providers or actually becoming the provider, we're indifferent there. All we care about are we improving clinical outcomes? Are we improving financial outcomes? And are we making all the stakeholders have a better experience? And if one or ideally some combination of 3 are working out, we are interested.
I love it. Any final thoughts you want to leave our viewers with?
Yeah, I think, look, our general MO here is what is the fewest assumptions to get right to predict forward. And with that, I'll repeat what I said. If you're a growth stage company that's improving clinical outcomes or improving financial outcomes or improving the experience, patient, provider, payer, or otherwise, or ideally some combination, I'd love to hear from you. We're pretty accessible. It's just kapil@catalyst.com. And we're looking to partner with the next great founder. And so would love to hear from any and everyone who thinks that might be a fit.
Perfect. All right. Thank you again so much for joining us, Kapil. I know that the founders that were out there watching Founder Insights very useful. And here at Nixon Law Group for founders, we've spent the last 15 years working with founders at all stages that they grow. If you don't know, audience out there, we're always creating resources to support the founder journey. And if you're curious, you can check them out on our website or you can follow me on LinkedIn. And then I'll ask our founders as well to please join us for more conversations to watch the VCs that are shaping what is next in healthcare. So thanks for tuning in to Inside the Deal, Healthcare VCs to Watch, and we'll see you next time.